Hello and welcome to the Weekend Investing Daily Byte of 17th of September, and yet another day of flatness and no major moves in the market. Just some soft moves in public sector banks, public sector enterprise stocks, and Nifty remaining where it was. So very tentative ahead of the Fed move. Rate cuts, can they cause a market crash? We will do the study towards the second half of the video. Please stay tuned. Please do subscribe to the channel and click on the bell notification. In terms of the index where the market is headed, you can see today was the fourth day where the market has ended very near the all-time highs, remaining near this 25,400 mark for four closes now in a week. Uh, Pretty much market is tentatively waiting for the outcome of the Fed 0.14% up today. On the Nifty Next 50, there was some sell-off, down by 0.27%, but nothing really big as such, just lethargic moves over the last three sessions, 0.27% down. Mid caps also were down 0.13%, but very much remaining within the realm of all-time highs. And small caps were down 0.19%, very near the previous highs and staying put there. So no major action there. Bank Nifty gradually inching up 0.07% up, did not fall today, gradually moving up towards its previous target. In terms of momentum trends, on the advanced decline ratio, you have about 200 to 300, so 200 advances to 300 declines, slightly in favor of declines, but again, very well distributed in terms of the advanced decline ratios. FIIs sold 1,600 crores on 16 September after a while. We have not seen 1,000 crore plus sell from FIIs since a while. DIIs bought 754 crores. So there's sort of tentativeness in terms of buying from DII side, and of course FII is selling after a while there. In terms of Nifty 50 index, very specific stocks in the auto space, Mahindra and Mahindra, Bajaj Auto, Hero Moto did some gains. Kotak Bank was up within private banking, and Bharti Airtel from communications 1.6% up, L&T up 0.9%, NTPC up 1.2%. But other than that, there was no major gainer. And in losers, you have ITC, Coal India, and Tata Motors giving up some of the gains. In the Nifty Next 50, however, there were larger losers. So this entire public sector enterprise stock pack, HAL, BEL, IOC, IRFC, REC, PFC, PNB, all losing ground. Only Varun Beverages gaining 4.6%. Bosch gaining 2%, Geofinance, Adani Green, Siemens gaining minorly, but Zomato also losing 2.5% today. Sectoral trends were muted. Public sector enterprise stocks down 0.6%, PSU banks also down 0.6%, metals down 0.4%, and real estate is a surprise winner today at 0.6%. If you see, the real estate is now almost the top gainer in the last 1 week. So it has come out from its lethargic moves in the last few months. You can see over the last 3 months, it is down minus 5.6%, and PSU banks are down minus 10.6%, but coming back now. So public sector stocks really taking the brunt in the recent sessions. Prestige Estate, Sobha, Oberoi Realty, Godrej Properties, Macro Developer, and Brigade were the ones that were making a move up. Real estate index up 0.6%. In stock spotlight, you had Blue Dart going up 12.4%, hitting a new high. You can see how it has been consolidating for the last many months. And suddenly now there's a up move of 12.4%. In the longer term chart, you can see that it is going to challenge its previous highs. And it is likely that, this 10-year hiatus that it has had near this 5 to 8,000 mark will now get broken and it goes much higher. Rate cuts, will they cause a market crash? So FOMC meet begins today. US Fed likely to reduce policy rates. The debate is whether 25 bips or 50 bips. My personal speculation is that it will be 50 bips, but let's see. So let's now analyze the S&P 500, Nifty, and gold in INR from interest rates perspective when interest rates have dropped from peak to bottom. So this kind of history will tell you some, how the markets have been reacting in the past. There is no guarantee that the markets will perform the same way going forward, but we should learn from history. So we've taken three phases: phase A, phase B, and phase C. The first phase is that of the dot-com crash, phase B is the GFC, and phase C is the COVID crash, and we'll see how these three performed during this three phases. So phase A, where interest rates were cut from 6.4% to 1%. That was a drastic cut going from January '01 to July '03. And you can see here that S&P 500 lost nearly 23% in this phase. Nifty lost about 11%, although on the way it did lose about 25-30%. And gold in INR gained about 30%. So this is how the three reacted for this phase of interest rates going from 6.4 to 1%. In the second phase, in the GFC, going from July '07 to Jan 10, you can see here that S&P fell by 25% in this phase of July 7 to January 10. Nifty actually was down about 35% in the middle of it, but recovered back to plus 19, and gold was up plus 96% during this phase. Phase C was when interest rates went from 2.4 to 0.5. This was during the COVID crisis. So August 19 to April 20th was the bottom. And you also had Nifty go down 25% during this phase. S&P was down 16%, and gold was up 22% in INR terms. So in all three phases, what we are seeing is that gold has outperformed the market, and the two indices that we have underperformed during these phases. Now, the market expectations for the next couple of years is pretty dramatic. That by end of 2024, we'll be at 4.27, and by end of next year, we'll be at 2.8 and 2.73 by September 26. If this were to really play out the way it is expected, you can definitely expect the equity markets to be in some sort of a doldrum. Now, the last three cuts cycles were also coinciding with some crisis, and usually it does because rate cuts happen when there is crisis in the markets. So rate cuts in 2000 and 2008 witnessed an economic crisis. Rate cut in 2009, there was a pandemic, and hence there was a accentuation of rate cuts. So far, there is no pandemic, there is no crisis as such, but maybe the Fed sees that there is some crisis coming. That is why the 50 basis points is possible. Gold has shown well in all these different three cycles that we've seen, from the absolute peak to bottom of the interest rate cycle. And maybe it has coincided with a crisis, but in general, also, whenever interest rates fall, the propensity for people to go into gold increases because, as yields are reducing, gold becomes comparatively more attractive. Uh, if you see, however, the Nifty index, despite all the Fed moves that we've had, markets have, weathered all the storms in the past. Nothing to worry if you're following strategies, and if you're prepared emotionally and mentally that, some falls will come on the way, and you've done asset allocation, and your strategy is self-healing. I don't think there's much to worry about, although, there will be pitfalls on the way. So the question to be asked is, what's your take on the upcoming rate cycle, how you are preparing for it? Are you mentally prepared for a slowdown or a shock in the next couple of years? Are you invested in gold as a hedge to your equity portfolios? Are you going to continue your SIPs into your equity? No questions of stopping it, in my view. So all these are questions that, if you are well prepared ahead of the crisis, if there is any, you will find that, you'll be able to navigate the journey very, very easily. Thank you so much for watching. Do subscribe to the channel and give a like if you do like the channel. Thanks. Bye.